What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 9th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to speak one-to-one with you guys about a really important thing that I feel is kind of in the air right now and hasn't been properly addressed. I want to speak to those of you who are bearish, who are bullish, any of you out there who are interested in watching the kind of content that I put out here on the channel. And that is what's going on in the market right now. I have to say, I think while bulls and bears in crypto and in pretty much any asset class right now, whether you are convinced we're in a new bull market or this is a relief rally and we're in a longer term bear market, everyone kind of is in the same camp of asking the big question: what the hell is going on? And pardon my language, but I mean, really, this is a really confusing time in the market. So I want to spend some time to address that kind of emotion that I feel practically everyone can relate to at this moment. And on top of that as well, I want to spend a little bit of time to discuss what's going on in the macro sphere that can help explain where we really are right now. And yes, I will share my opinion, which does lean in one direction over the other, but I want to kind of provide the nuance here that explains it, okay? So if you guys enjoy my rambling here, if you feel that this gives you some good guidance, I only ask that you guys like the video. There's no sponsor or anything today, so let's go ahead and kick things off. So I want to go ahead, talk a little bit here about what's going on with Bitcoin's price. For a lot of people who are in my camp, who are the more kind of bearish people who, in my case, I sold my positions, whether they be altcoins or Bitcoin, back here around 24,500. Really timing the top of that relief rally, kind of taking advantage of the upward momentum. And as we were continuing to call for further downside, we did see that playing out from around 24.5K down to 16K. However, as many of you probably know, we've been in cash during this period of time, and Bitcoin, yes, has come up here towards around 30K back in April, and while it has dwindled down here, it is still slightly above where we took profits. Now, for a bit of a nuanced, important detail, we were positioned heavily in a lot of altcoins, and those altcoins were sold at a much higher price than where many of them are sitting now. So again, important nuances here to consider about my trading strategy, why we did what we did, and the kind of risk-off position we took at that time. And I know a lot of bears, at the end of the day, are probably in the same camp that I am. And I'll be humble enough to admit it that I'm a bit shocked that we missed a lot of this move here, guys. I will not try to deny that. We did not trade the swing to the upside, and we remained in cash during that period of time. And I know that a lot of people who are in that bear camp can feel kind of bad about that and feel, man, I missed that trade, or what if I'm missing the broader bull market here that could be playing out over the next couple of years? It seems like it's inevitable at this point with how much Bitcoin's price has accelerated. I want to come back to that later on, but I also want to talk about what the bulls might be feeling right now, because while a lot of bulls who might have bought back here at 16K or bought along the way up, were feeling really confident back in January to April as price was accelerating towards its highest level since back in June of 2022, nearly less than almost coming up on a year in that case, and coming up towards a very significant price range. Since back in April, we have been dwindling from around 31,000 towards down here at around 26,500. And I bet a lot of bulls now probably feel like a lot of the bears here as well, in this state of confusion. We were told back a couple months ago, with the banking crisis we were having, that there was going to be a Bitcoin bank run where people were going to mass withdraw their money, sell their treasuries, remove their dollars from their bank accounts, and rush it into crypto. And we were also hearing about the BRICS narrative, that there was going to be a massive de-dollarization, and that Bitcoin could potentially, as the dollar grew weaker, start to shine on the world stage. But as you all know by now, the clear metrics have showcased that that is just not the case. Stablecoin liquidity has been dwindling since back in May of 2022. For over a year, we have seen a haircut of over nearly $25 billion of stablecoin liquidity, and it has been relatively flat since back in October of 2022. Not to mention, while the dollar index here has not made any substantial moves to the upside, it has been relatively flat since December against other world currencies. So it's not flash sailing against other currencies. There's not some rush to the Chinese yuan or, the Brazilian real or any other type of currency aggregator that BRICS might want to create that is separate from the dollar. The dollar is still the world reserve currency. And on a long shot here, on the grand scheme of things, right, if we really take a look at that longer term trend, we will see that the dollar is still remaining relatively strong against its broader trend over the past few decades. There's no denying this. It has been resilient against other currencies. So stepping back here, right, again, like I can sympathize with a lot of you out there who might have bought up at this price range or even might have been smart enough to buy back here in November or February and are wondering, man, I was feeling like it's going to be the next bull market. The price really isn't making any substantial moves. And what's going on here? And I understand how painful it can be for both camps here, whether you are a bull or bear, when you see this kind of price action, depending on your scenarios, yet you see NVIDIA riding up from $110 per share back in October up towards $420 per share. No meme intended, 420. But you get my point here, right? It can be difficult to go through these kind of things. But man, like what's going on here? What kind of environment are we in where NVIDIA or some, plays like the FANG stocks or Apple or Microsoft are rallying, but Bitcoin is not doing much? And it's still, however, trading at a slight premium from this bear market lows. Why isn't it correcting down if crypto is not the sector? And also, why isn't it trending up if we are in a new bull market or if we're in this optimistic period of time where all the technology stocks are doing well? Well, it has to do with the macro environment. It always comes back to the macro, guys. Whenever you are feeling confused at the end of the day, you need to zoom out and you need to figure out what's really going on here. Now, obviously, there are important nuances here. AI is the narrative right now. Everyone is very excited about generative AI. And you all know where we stand on this probably at this point. We think that it is overestimated how much generative AI is going to just take over the world right now. It's as much as it is an interesting technology. If you have used ChatGPT or any of these tools long enough, beyond the YouTube videos telling you how to make $10,000 a day or build the next major application or how ChatGPT will automate the entire world, if you've used these applications, you know it's a bit noisy. It's a bit of an oversell at this point. Let's be real about it. And as we talked about in this month's newsletter, which you guys can always find out in the description, we dove into the numbers. We dove into the numbers around generative AI. And to be honest with you guys, it's not looking pretty. At least the market is overpricing this to a large extent. And I think even those who are bullish on this technology long term know that it's overpriced, right? So let's get that kind of nuance out of the way. But these kind of things, these narratives, these centered points in markets where liquidity flows into particular asset classes or specifically into a couple select names like the FANG stocks, NVIDIA, the prior market leaders, is something that happens time and time again in the early stages of a recessionary bear market. I want to take a step back here. You guys know that we have talked about how the NASDAQ, the broader stock market, over the last decade, the 2010s, was in a secular bull run following the 2008 recession. This is generally what played out here. I'll bring it here to the monthly so you guys can see it a bit clearer here. We went through a grand slam bull market. The NASDAQ climbed from 1,400 points up to 16,000. That is more than a 10x off the lows. A huge move for technology stocks. And in that same period of time, we had Bitcoin going through a massive expansion as well. Turning off the drawings here, right? Just looking at price, even turn off the indicators. We're going to hide everything. Just focusing on that price. From 2010, Bitcoin moved from being worth practically nothing to being a $500 billion asset at current market valuations. If you take it from the absolute peak here, we're talking about an asset that was worth over $1 trillion. More than $1 trillion at the peak at 65K. Or around 68K, I think, at the absolute highs. Yeah, around almost $69,000. Again, the memes and price action are just playing out, right? My point here is this. That period of time was a period of monetary expansion, a period of relatively low inflation, and asset prices did exactly what they were supposed to do. the money supply grew, asset prices grew in that correlation. And on top of that, it was a period of high risk taking, low inflation. Things were predictable. The sky was the limit. Technology was expanding. Web 2 was becoming a major thing. And then we started to see the advent of crypto and Web 3 and a lot of advancements during that period of time, a lot of investment, lots of capital flows, and a massive expansion in that period of time where Bitcoin created some of the best returns we have seen in any market throughout history, not to mention some of the returns that people got overnight as they got rich off of various altcoins that had little to no fundamental value but had future promise of creating value. This is what happened throughout 2010 to 2020, roughly speaking. But now we are entering into a different fundamental chapter, a chapter in which when we see names like BNB starting to get knocked down off of this news, we need to zoom out and see just how far things could really go. That bring us to names like Ethereum that on the monthly time frame are still in the red here on the trend since back in May of 2022 for a year, still not enough to give us that trend flip. And it takes us back here to looking at what's going on with monetary policy. I know it's boring. I know we've probably beaten it like a dead horse. I know we've talked about it a lot, guys. But if you want to understand where I'm coming from, it's not that I have some vendetta against Bitcoin or crypto. We, for the last decade, believed the number goes up and to the right. We bought dips when no one else would. We believed in crypto. You guys can go back. Even during prior crypto bear markets, we remained optimistic. But there is something fundamentally different this time. And that is that the dollar is in a relatively strong position in the grand scheme of things against world currencies. And while it has let up some of that, it is still holding relatively strong. And what the bond market is telling us alongside the dollar currency index is that the Federal Reserve is not done yet. It is not out of the woods in dealing with inflation and tackling inflation with heightened monetary policy, whether that be raising interest rates or reducing its balance sheet, i.e. all of these are going to be contracting the money supply. And that is not a good thing for asset prices. But some might argue, Nick, how can Nvidia as a stock or how can the NASDAQ here be trending up here since October during this period of time, during a supposed period of monetary contraction? Doesn't sound like it has such an effect. Trust me on this, guys. When you have increased the money supply by 40%, there are going to be shockwaves. There are going to be afterthoughts here where essentially markets will come up for a short period of time. But do not deny the reality here that liquidity increments over time, increases in liquidity are going to be necessary to maintain another bull market. And if the Fed is not going to be able to do that in the next 6 to 12 months, we've really got to ask ourselves a fundamental question. Is Nvidia really worth $1 trillion at this point? And if the generative AI narrative starts to collapse, the really only thing that's got markets optimistic other than tech layoffs and cutting expenses, which do not drive bull markets, and crypto for that matter during this period of time, right, has been pushing sideways. The risk on market above all markets. What happens if that liquidity contraction keeps happening? What happens if generative AI does not play out like people are pricing in right now and markets start to correct? Prices start to get back to their fundamental valuations. What's going to happen to Bitcoin? What's going to happen to crypto? It's probably going to be pretty bad. Right? And that is why, again, I give major kudos to those of you who caught this rally. And I can resonate with a lot of you who maybe bought up here at 26,000, 31,000, who are maybe neutral right now, maybe in a little bit in the profit, depending on where exactly you got in. Major kudos to you if you caught that trade. Big props to you. But it doesn't mean you need to fall in love with your positions. It doesn't mean you are owed anything just because you like crypto from a fundamental perspective, that you somehow have to hold it, right? There's nothing you owe the market here. And if you are starting to feel like we are not in a bull market, that the evidence is starting to prove otherwise, that the narratives that built up this rally don't hold their own weight, then you have every right to go back into cash. And I got to tell you guys, in an environment where you can earn, 3-5% on treasuries, on high yield savings accounts that are FDIC insured, why would you be taking excessive risk when it's incredibly expensive to borrow capital and increase the money supply, right? Increase credit, increase speculation. It's more expensive than it's been in practically 2 decades. After a decade of easy money. That is not going to be a good environment here for assets like crypto. And this takes me towards talking about a really big picture thing. I want to take a look here at the US 30-year. This is the yield paid on US treasuries that mature in 30 years' time. Take a look at this yield right here, guys. And I want you to let me know what you think here. We were in a multi-decade channel since back in the 1980s, right? You can just see this here. We were just continuously trending lower highs, lower lows. And this meant that basically we were in a bond bull market. Bond prices went up, yields went down, okay? So essentially, people just kept buying into government treasuries in the United States. People kept buying government debt. However, we just had a debt ceiling crisis here over the past couple of months. And once more, we also have the Federal Reserve tightening interest rates, increasing them, right? Which is inevitably going to increase bond yields and the cost for the United States government to borrow, right? And I know a lot of people said, oh, the government can't keep doing this, the debt ceiling, yada, yada. That is just further proof here, right? The fact that it has continued to expand since back in May of 2020 for the last 3 years, that the federal government not only can do this, they have to do it. They need to get inflation under control. That is the name of the game here. And what we have seen here is very likely the beginning of the end of the bond bull market since back here in 2022. That has been something that's been discussed for a while. I know a lot of people in crypto don't cover these things because it seems boring, it seems abstract, it seems like it doesn't matter when Pepe coin is going off like a rocket and that's what everyone's talking about. Sure, there are those microcosms that do well, but do not think for a second that crypto is separate from these macro dynamics, because this speaks about the liquidity flows in the market. In last year, in 2022, we saw something that we have not seen in this multi-decade period of time, and that is a blue flip here on the US 30-year yield on the yearly time frame. What this means, folks, is that while inflation may be coming down right now, it is going to be a long fight. It is going to be a period of time where interest rates remain relatively high, and the Federal Reserve is going to continue unloading its balance sheet. Those elements alone are going to be a huge weight on the market. So unless generative AI allows companies to lay off 50% of their employees and we all just retire and live in la la land, asset prices are not going to keep going up. If the only other backup that companies have, the companies, the FANG stocks that are the market leaders right now, where other stocks are kind of sitting sideways, crypto is sitting sideways for that matter, right? If we remove, just focus on those companies, those tech names, if all they've got is layoffs or AR and VR, augmented reality, virtual reality, all we have to do is come back here towards what the bond market is telling us. The bond market is telling us if we look in on those shorter term time frames, they're showing us that since back in December, time and time again, estimates have shown that the Fed is going to continue raising interest rates. Maybe they don't do it in this next meeting, guys, but I got to tell you all, they're going to be keeping rates suspended for much longer than people estimated. And can we really have a major bull market when interest rates are this high? That's a question you guys need to ask yourselves. I can sit here and ramble all day, and I respect if you guys disagree with me. That's fine. If you've made it this far, I appreciate that you take the time to listen to me. But man, we've covered crypto since 2017, guys. I don't want you guys to think for a moment that I dislike this industry or that I don't see the light at the end of the tunnel, that there will be another investment wave in the future. But 2021 was kind of the blow-off top, guys, if that wasn't clear by now. And we are going to have to face the consequences of that excess money. You don't just get to have the party and drink all the alcohol and not have a hangover. Generative AI is not going to save you. And I think it's evident by looking at Bitcoin's price that these kind of alternative narratives, if anything, are harming the crypto space because it takes liquidity and attention away. Crypto's not the cool kid on the block anymore. And that's difficult for me to say as someone who focuses a lot on crypto. But I'm going to be real with you guys here. I'm going to be here during bull and bear markets. I'm going to tell you how it is, at least from what I see it as. There are plenty of people out there who will tell you the optimistic narrative. I'm here to bring you back to the macro picture. And that's, again, at the end of the day, guys, why if you are interested in this kind of content, if you are looking to make sure that you're going to be prepared for that next upswing when we've got all the key signs that it's really a new bull market, I highly recommend you guys check out the Dash Report. We give a ton of things in the Dash Report, a 360-degree view on what's going on in markets. We give a 20-plus page monthly newsletter each month. We give trade setups going on between equity markets and during more optimistic times, also crypto as well. And on top of that, you guys will exclusive market update videos. We just did one yesterday that we sent out to Dash Report members, our mid-month webinar where you guys can ask me questions. And I try to get towards asking all the questions that you guys send me. And also you get to join the discussion group and some different types of discounts to different conferences and potential meet and greets where I might be attending. But these are all the kind of things that you guys can get within the Dash Report. It's a great way where you can support the channel, support the free content that we generate here on this channel, and just be able to get a better view about what's going on the world stage. And if you find yourself making it this far with me rambling like this, perhaps the Dash Report is for you. We try to just promote it towards the end because I don't want to berate those who don't have the time to really stick through and listen here to the macro perspective. I'm not saying I'm going to get everything right, guys, but I'm trying to give you guys the good stuff, things that 95, 98% of market analysts are not going to talk about, which will help you be positioned to be in the winning camp long term. Right now, we have to focus on capital preservation. So if you guys are interested in the Dash Report, I'll leave a link down below in the description. You get 20% off on an annualized basis. And even if you can't subscribe to the Dash Report, consider dropping a like. It's a great way to support the channel and the videos that we put out here. I hope you guys have a wonderful rest of your week. Have a great weekend. Take some time off. Step away from the charts. And I'll see you guys back on Monday when we've got some more exciting things to talk about. Take care, everyone.